Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, going to be looking at SPY, IWM, QQQ, and VIX here as we head into tomorrow, the second half of the week. And also want to touch on commodities. Chart Guys James covers the commodities often, but there are some really nice longer term setups, and we'll look at those real quick. So SPY on the daily time frame, and I actually need to be looking on the shorter term time frames as well because there is a better view that I like of this. But we have a daily inside bar to watch yet again, rejecting from the daily middle Bollinger Band resistance. And essentially we just have a continued tightening range. And it looks like we might have to wait for Friday to begin the earnings for the financial sector to potentially get this break. So what I'm watching on the SPY 4-hour chart, cleaning it up here, it's an ascending triangle pattern. So I'm looking at higher lows and really would put it right there. Looks like we had one pre-market candlestick close underneath there. So if you wanted to be exact, that's about where it would go. But either way, horizontal resistance line and an uptrend support line. And it's just a tightening range looking for a clear break. In terms of price levels, the most important price support to me is 262.15 and resistance is 266.04. So those are the price ranges that I'm watching. But in terms of the tightening pattern, I'm keeping it on here. And so many individual names are following very similar patterns on their 4-hour chart due to these correlations with the overall S&P 500. So how the S&P 500 breaks this tight pattern is going to indicate whether this daily chart, back to the daily, whether it breaks bullish and heads to a higher low and a higher high, or whether it breaks bearish and heads back down towards the 200-day moving average support. That's what we're looking at for the rest of the week, and a break is very likely sometime in the next 2 trading days. So that's what we're watching on SPY, the weekly time frame. If we get a bull break on that daily chart, we'll be looking to form this weekly equilibrium pattern and topping out somewhere around the 270 level. And if we get a bearish break, we're going to be looking right back down to our support levels, and the bears will have the significant upper hand. IWM on the daily time frame, much more bullish. We've known for weeks and weeks that it has been the most bullish market compared to the other names because it is holding up much better. We didn't get anywhere near our February dump lows, and we only just barely broke our March lows, which SPY broke that level significantly. And here we are. We're already getting daily higher lows and higher highs in a bull MACD cross. No other name here, at least SPY and QQQ, they don't have higher lows and higher highs yet. So IWM is leading the pack, and the weekly time frame, the equilibrium, looks more likely to follow through because here we are right in the middle of the range, and we're going to be looking to set a lower high on the weekly time frame and continue to tightening this equilibrium up into May is the way that it's shaping up on IWM. QQQ on the daily, so actually I take that back. QQQ does also have a higher low and a higher high, but it's not nearly as strong as we've rejected from the 100-day moving average resistance 4 times in the last 2 weeks now. So the most important support levels for me, and actually here on QQQ, we can draw a very similar pattern on this 4-hour time frame. So here it is, 4-hour chart on QQQ. I would put my resistance level right there. And again, you can just see the correlations. This pattern is almost the same. And it's an ascending triangle, and we're going to see a break. We're going to run out of space here sooner or later in a couple days. So we're going to see a break sooner rather than later. So that's QQQ on the 4-hour time frame. Very similar setup on the daily chart. If we get a bull break, we'll be looking to break over 162. And the weekly time frame is not an equilibrium pattern because we're coming off of the all-time high. So it is the most bullish setup out of the 3 in the sense that we are still in an uptrend overall. But just in terms of the daily action, IWM is the strongest of the 3. Checking in on VIX. VIX is still trading sideways, very tight. Key support is down to 1857, and it's just consistent lower highs. And until the bulls break those lower highs, they're obviously not going anywhere, and that would require a break of support on that pattern on the SPY 4-hour time frame. So I can't tell you how many individual names that I'm waiting in their tight trading ranges. I'm waiting for this SPY break to give us some clarity in direction, and that could come, like I said, in the next 2 days. So VIX on the weekly time frame, inside bar is very likely to form this week, and we're seeing a tight range and waiting for the break. So what I want to point out on commodities here is longer term time frames. Here's the dollar on the weekly chart. The dollar right now is doing a weak bounce on the weekly chart. 2 months of trying to bounce and really gaining no ground. It's a potential bear flag. And if we drop back down to lower lows, look at the lack of support nearby. And this is because we broke out in a huge way in 2014 and 2015. And look at this lack of support. So if we break our recent lows, we have just a couple support levels before we get down into the low 80s. So there's a lot of space here without a lot of support established. And what that leads to is the names like commodities that are inverse to the dollar. Dollar weakness generally means strength in gold and oil. So checking gold, look at the weekly chart. Just like there's a lack of support on the dollar, there's a lack of resistance after gold makes this bull break. So if gold makes this bull break over the highest price we've seen in years, again, there's a couple resistance levels nearby, but there's not much in this space. And oil shows it even more so. Oil getting a big bull break today. Look at the weekly time frame for oil. So here's this white line breaking this recent price. Look at this lack of resistance. Again, it's the exact opposite of the dollar. Because we all out dumped at the same time the dollar was a raging bull, there's a lack of resistance nearby. We've been making oil videos now for years and years. And over the past year, we were anticipating oil to be in the mid 60s. And at this point, we're looking like we're going to the low 70s, again, due to the lack of resistance and due to the strong weekly trend. So keep an eye on commodities. There's definitely opportunity there as well, along with this market volatility. And we'll continue to check back in and watch this 4-hour pattern. We'll see if it breaks tomorrow. Have a great night.